Thank you so much, Ginger, for the introduction, and thank you to the Academy for having me. It's a great honor to be here. I was trying to join the dots together of everything that had been said and to rethink my presentation, so bear with me. But before I go into my presentation today, I just want to connect to the last speaker, because usually we see SMEs as a domestic unit that we want them to trade. Just recently in March, we just launched a research report which I led on SMEs internationalization through foreign direct investment. And there we showcase some very interesting case studies, for example, not only from advanced countries like Korea, where SMEs and in some Asian countries that unicorns become important investors, but like country like Turkey and in Latin America is becoming a new form of integration. So I think we should do more about internationalization of SMEs beyond exports, we're going to FDI. Now, today. So what I wanted to do was to talk about a little bit the World Investment Report. The World Investment Report is the flagship publication of the United Nations on international investment flows. We look at downstream investments, the activities of multinational enterprises, but also we look at the capital markets. Since 2019, we have been mandated by the General Assembly to report on investment on the SDGs and to estimate the gap. I mean, this is too rich to present here today. I am going to focus on major investment trends, but then another feature of the report is that every year it covers a different issue related to investment for development. So this year the topic is investment facilitation and digital government. And the inspiration for this was UNCTAD has been doing a lot of technical assistant work in this domain. In fact, we have built portals in many countries, including LDCs, and this had helped them to leapfrog into what is we assess as investment attraction, but also the formalization of the business environment, not only for domestic businesses, but as a tool to attract foreign direct investment. And this includes information portals. Yes, they are important to have all the information out there, but what investors want is the possibility to streamline transactions, to be able to register the business, to pay taxes, so I will come back to this in the second part of my presentation, but just moving on. So this is what I'm planning to do. I'm going to talk about a little bit of the trends, then the context and background on investment facilitation and digital government, and I'm going to show some progress based on some surveys that we did, and also the update of UNCTAD's own portal, and then what is the impact and some way forward in terms of research. Perhaps I might not have time to go there, but since we closed the report, I thought it was interesting to go back and try to look at more fundamental issues related to digital investment facilitation. Just to start, I mean, the previous speakers all have presented a brilliant background on what is going on in terms of growth prospect and geopolitical tensions and impact on the global economy. So all these trends that were discussed today, including the weakening growth prospects, the trade and geopolitical tensions, the industrial policy actions, and supply chain diversification, all of that have had a bearing in foreign direct investment. Here is the summary of the 4 major flows that we look at. We look at FDI, which is balance of payment data. We look at international project finance that is crucial for attracting, is the main vehicle for investment in sustainable infrastructure, especially in developing countries. And also we look at cross-border M&As that are mostly financial flows affecting developed economies, and then we look at greenfield projects. So headline is that FDI continues to be weak, FDI flows, and here we report a minus 2%, a decline of 2% of global FDI. But there is a proviso here. This is global FDI. If we deduct the impact of what we call conduit economies, transit economies in Europe, few of the transit economies like the Netherlands, Ireland, and Luxembourg, and so on, the fall is bigger, is over 10%. We observe the fall in global investment. So this is an issue that we keep discussing, that like what is the real impact? This is including the conduit economies. Then international project finance, this last year, it was a big blow to what is the prospect of achieving the SDGs, because as I said, most of the SDGs-related investment comes in the form of IPF, in the form of public-private partnership, or in the form of big conglomerates through facilities such as the Belt and Road Initiative and so on. So there was a decrease in 23% of international project finance, especially due to the tightening of financial conditions in global markets, the rising interest rate, and so on. Cross-border and mergers and acquisition, it was even more dramatic. It was minus 48%, sorry, pardon my views, minus 46%, also linked to tightening of financial conditions. And again, this affected more developed countries. But there was some bright spot. We also report on greenfield investment projects. We focus on announcement of new plants and new operations, mostly in manufacturing. And this is very important for developing countries' productive capacity. So here we saw a 2% increase, including in countries like in the African region that usually are laggard, that they receive less investment projects. So at least there is some bright spot in terms of manufacturing investment. So all this led us to think, what can we do to help? Because every year, as I said, we cover different issues. Last year, we look at investment in the energy transition. The year before, we look at what will be the impact of introducing the minimum tax of 15% on multinational enterprises and so on. So we said, okay, what could be a topic that could help developing countries, although it's not a silver bullet, and that's why we went into, okay, how you can quickly try to fix or help to fix the business environment. I mean, this is the same message, but disaggregated by region. We see that, again, the 2%, and this is including conduit and developed economies, there is an increase, 9%, but again, if you remove European countries, it will be a negative value. Interesting, in Asia, there was a decline of 8%, and it was mostly due to a rare decline in FDI into China. China is the second largest recipient of FDI in the world, and this is also linked to GVC's reconfiguration that is in tandem accompanied by the reconfiguration of FDI. But also India saw a decline, and some countries in other parts of Asia. Only Southeast Asia had a bit of resilience, and also because some of the countries have benefited from the reconfiguration of investment flows due to geopolitical tension. I mean, in addition to the trends, we also recently did some research on the impact of fragmentation, of geopolitical tensions on FDI and FDI reconfiguration. Just before COVID, I started a project with Professor Emily Blanchard, trying to look at how projects exposed to the trade tension were affected by the trade war between the US and China. This takes things a bit further, but it's still a similar data. In the past, what we did was matching trade exposed, what we call trade exposed projects, and link it to FDI decisions. So basically, what we show, I mean, this is only one of the figures of the report, but what we show is that FDI is going more into higher value-added activities, and this is dominating the FDI landscape. And I mean, behind this, there is a lot of servitification of manufacturing, and you see here the gradual decline in traditional manufacturing. As a development economist and also as a development agency, this poses some important questions, and also for developing countries, challenges that traditionally enter GVCs through the lowest rank of the chain, through basically low skill, low value added manufacturing. So this is an issue that has implications for development, for inequality, and all the issues that have been discussed today. So this is the general context. I have 10 minutes, so I really have to run to this. So then the topic of the report, investment facilitation and digital government. I mean, here we are not advocating artificial intelligence means straight away. I mean, this is how streamlining procedures, as I say, because digital investment facilitation has two elements. One is streamlining, that is, as I said before, that investors can do their transaction in an efficient and low-cost way, but also transparency. Especially when it comes to infrastructure-related sector, it's important to have transparency about the institutional environment. I mean, these are very complex projects. Sometimes we think that it's only the money, but I see the importance of institutions like the AIIB, the Inter-American Development Bank, in helping countries to build bankable projects, because investors need that transparency. So I will skip the literature review. I only have 10 minutes, but as I said, the starting point that we're starting to trace and that we saw since COVID is that FDI remains weak. We look at different surveys of investors and surveys of business sectors, and they all show, including surveys that we conducted for the World Investment Report, and they show that transparency of rules and regulations and streamlining of administrative procedure are the two more demanding or the two processes that investors find more challenging in developing countries. So we believe, and we show in the report, that digital government measures have the potential to address many of these institutional challenges. And especially we have assisted least developed countries like Bhutan, countries in Africa, like Mali, and they have really leapfrogged in terms of the output observed. And adopting digital platforms and tools have become also very important in the policy domain. At UNCTAD, we also track policies, and we see that digital tools are also becoming important in international investment treaties and bilateral investment treaties. Remember that investment does not have a home like the WTO, that trade has the WTO. So we try to look also at these issues of policy making. I mean, there is a literature related. There are not many papers out there looking at these things, but I mean, we have some solid background, and in fact, some of our findings relate to those of the World Bank. Some colleagues at the Inter-American Development Bank, like Volpe and Martinkus, and earlier work by Harding and Jarbochik, have shown how investment promotion and increasingly digital tools helps attracting foreign affiliates from firms headquarters in advanced countries. So there is a solid background to this. I mean, this is confirming what I just mentioned. The top three services that firms demand when they are going to invest in a country are business registration, business licenses, and tax filing. For them, these are the more important, and they differ from the other top 20 by a margin. So I will not go into the technical details, but in terms of, I mean, policy making and those also from industry that are here, I mean, this is an important example of what we have been doing since 2016. We have what is called the Global Enterprise Registration Portal, and this basically helps us to assess the quality and the services provided by countries to not only domestic enterprises, but for foreign firms. We have assisted some countries that didn't have even an information portal, as I said, and now some of these countries have leapfrog, and they have portals that are on par to those of some developed countries. Unfortunately, we only had 3 data points, so we couldn't do a very sophisticated analysis. We calculated some semi-elasticities, and what I'm doing now is trying to advance more using a similar index developed by the UN Department of Economic and Social Affairs, that basically it is an index of e-government, and it has 3 components. One is the online services, that is similar to what we rank, and then other issues related to, there is a human capital index and a telecommunication infrastructure index. But all in all, our work in terms of investment attraction shows that online services are more important. I have 5 minutes, so this shows the result of our global enterprise service registration. So in developing countries, portals went from 82 in 2016 when we launched the program to 124. The quality, which is in circle, has increased, but also the most important thing is the least developed countries that are part of this group. And single windows also have increased, allowing investors to do simultaneous transactions. An important issue here in terms of policy is that some countries discriminate between foreign investors and domestic investors. For example, interestingly, in developed countries, there are a lot of rules-based barriers, and this is understandable because there are some security concerns and especially a lot of money laundering concerns, and there are some hurdles for investors vis-a-vis more open regimes in developing countries because they need the investment more. This is a distinction here. So just quickly, we did some quartile analysis. We rank by the quality of these portals, and we see that in general, digital investment facilitation is associated with higher institutional quality by definition because some of these components also are part of the World Bank Institutional Quality Index. But then interesting here in terms of business creation, we have in the top quartile in terms of quality a lot of least developed countries which we help, and they have excellent portals. So here that's why the top quartile is lower than is expected. And the same of FDI. And as I said at the beginning, we cannot expect that having a single window is a silver bullet for all the development and initial conditions, but it matters. Unfortunately, I cannot show you all the regression analysis, but we show some semi-elasticities, and on average, an increase on 1% and 1 percentage point in the index, in the quality, increases FDI by around 8% in developing countries, controlling for institutional quality, development status, income level, and so on. And again, this is in line to the findings of the IMF and the World Bank. This shows some work that I'm doing now using the DESA index because it allows me to go back 22 years in time. Unfortunately, I don't have the time to show you the results, but here we show the impact is, these are elasticity, so here the impact is higher in low-income developing countries in terms of FDI attraction. And these are the regression analysis that we are doing now to complement this. So basically, to summarize the three messages that we present in the World Investment Report, one is that, as we saw higher business creation rates. We also did some qualitative analysis in the countries where we have intervened. And for example, in Bhutan, there was a higher rate of business creation. In the hinterland, it's a geographically challenged country. A lot of SMEs were created, and half of them are owned by women, the same in the African countries where we are intervening. And also, we observed the higher institutional quality and higher FDI, on average 8%. And just the last minute, what in terms of policy implications, and also for us that we are an agency that we serve as a bridge with academia, private sector, governments, and other international organizations, what we advocate is that, what we show is that developing countries really gain from establishing digital government tools. For a long time, the focus has been on trade facilitation, and it's natural because of the WTO trade facilitation agreement. But here we have very clear and transparent outcomes. And we have some case studies that show that in digital investment facilitation is a stepping stone to broader digital government. For example, some countries are adopting a more comprehensive approach. We have a pilot project in Colombia whereby firms can already register their emissions as part of the Paris Agreement through the single window. So this is, of course, it needs some programming, it needs some, because it needs to check on the Paris commitments, but also on the local registration, but it saves time and it puts the country into the good roadmap towards reporting. And not only the country, but the enterprises operating in the country. So this is a pilot country. In Mali, we have a project working on registrations for investors in the pharmaceutical, in new pharmaceutical products. And basically, this is helping to accelerate the rate through which they can register their business and operate in the country, because it's one of the booming sectors. And finally, as I mentioned before, international investment agreements and bilateral investment treaties can be catalysts, because we have seen that in some cases there is a lot of conflict between the expectations of multinationals and the right of the state to regulate. So we track those international investment treaties. Out of 3,000, the majority of them are still old generations, so we are trying to help developing countries as part of the G20 working group in reforming the international treaty regime. And if I start that, it will be another talk, because we are also looking at gender provisions, treatment of SMEs on those agreements, and so on. So I ran out of time. I stop here. I have some ideas for the future, and I will share with the academics here later on in terms of what I want to do in terms of synthetic control analysis and some text analysis methodology to look more into policy making and investment attraction. Thank you very much, and I look forward to the panel discussion. Thank you.